Hey, real life traders from all over the world, what's going on? It's your boy Jeremy Alexander Newsome with my girl.
Angie Barbosa.
We're broadcasting live here from beautiful Sacramento, California, which is the capital of the state. And we're doing a market update today. And I want to talk a little bit about 2016 and kind of get you guys some Angie perspective, because I'll be looking at some charts in just a moment. But as most of you guys know, Angie is my real estate mogul. Absolutely love what she does with real estate, and she's really done a great job starting our own real estate business last year. Angie, what are your thoughts on 2016 in regards just to real estate and the market in general?
Jeremy, I think that overall, very broadly speaking, we're in for a bearish 2016. And that correlates really nicely with the real estate market. All the real estate gurus that I've been talking with are expecting a slowdown through the year. And great idea if you're planning on buying a home. How about wait till after the elections, because that's when we're anticipating a really big value drop in most properties.
That makes sense. There's a lot of talk about 8-year cycles with presidencies. Have you heard that? Like, you know, if a president is in the office 2 years, at the end of the year, that's something that the market really gets shaken up. I think that happened with George Bush. He was in a 2-year office, and now Obama's his ending is going to be at the end of this year in the primaries and the presidential race. So that makes a lot of sense. We'll see about exactly what the market does in regards to real estate. I mean, you know, it's one of those common investing tactics when everyone is buying, sell, and when everyone is selling, buy. So this is kind of one of those times where it's going to be a little bit cautious, because there's a lot of things going on right now, and people might be freaking out. So if you're thinking about buying a house, I agree with Angie. Let's wait a little bit a little bit of a correction, a little bit of a pullback. Let's see some of these prices decrease just a little bit. And as far as the market, possibly the same. Hey traders, thanks so much for watching that video. I really appreciate it. Want to hop over here to the markets and just talk a little bit about what I think might be going on. So here is the SPY, and just really quickly, not much is changing in the broader markets. A little bit of bearishness out there, and really quite predictable, the action the last few days. So here's your black candle from February 5th. We gapped down, right? Black candle's a retest gap, and there's the retest into the 10 exponential moving average, where we failed beautifully today. So really, on the general markets, right, the SPY, the QQQ, and the Dow Jones, I'm still a little bit more cautious, because there is a very strong support for both of those, or all of those ETFs to break. So there's the Qs, strong support at 94. Here's the Dow Jones, the DIA, strong support at 155, 156, that general area. So the SPY, QQQ, and DIA, strong support levels. Now, as I've been mentioning a few times, the other ETFs, very bearish in my opinion. The IYT, I love this candle that we're getting right here on the IYT. Looks really nice. The 50 EMAs coming down, a little bit of volume picking up. And if we hop over here to a weekly chart, this is the transportational ETF. It appears at right about there. This looks like a very nice retest into the 10, and expecting a potential rollover. XLE, that's another one that we've been bearish on for a while. XLE, this is the ETF that tracks the energy sector. And some traders out there having some good successes with this bear call spread, 61.62 expiring next Friday. And today, I love the candle that we got yesterday and the one that we got today. Nice little doji. If we break lower, specifically if we break $53.23 on the XLE, I think we'd go lower. And here's your IWM. Also, ladies and gentlemen, very strong support here on the IWM, right around 95. I don't know if that breaks down, but I will say if it happens, and if it happens soon, we are going lower. 2016 target is a very strong 85.03. Good chance that we could get there. We'll see what happens. As it happens, I'll be broadcasting that information to you. So a lot of you guys have been asking about gold and silver. Let's just check out Apple, and then I'll hop over to gold and silver and some of those stocks. Here's Apple. Apple is still not doing very much. I try to look at Apple every single real life stock review that we do, Monday, Wednesday, and Friday. Make sure to subscribe to our YouTube channel for all the free content. Here is the 200 simple that Apple has just been grinding with. We're going to have to just be patient on Apple for something more exciting to happen. So there's the support. There's kind of some lower highs. I love this little bullish candle that we're breaking down a little bit. And again, I think the 2016 target on Apple is the mid 80s, potentially, maybe as far as 76. But that's not going to happen until the 200 simple moving average on Apple gets taken out. I am a little bit bearish on GILD, just as a heads up. Here's the daily chart on GILD, and I do not think it breaks 94.49. Very, very strong support, gapped out of that, gap action with a bearish retest gap. Here's the retest, and we're coming to the moving averages and looking for GILD to potentially roll over. Disney today lost an hour and a half or so on Disney, trying to day trade it. Was it an hour and a half? No, 0.82 R. I'm sorry, 0.82 R lost on Disney today. I'm just trying to day trade it. I think this is a very, very bearish gap, ladies and gentlemen. Gorgeous white candle yesterday, gapped really perfectly. Tried it, just simply didn't work phenomenal. That's okay, right? Lose small, win big. That's our objective. So at this particular point in time on Disney, I am still, in my opinion, relatively bearish. I do anticipate for it to maybe get an inside day candle tomorrow, trade sideways a little bit, and then more than likely roll over down to $80 sometime in the next 2-3 months would be my guess. All right, cool. So gold and silver, GLD. This is a really popular one. This is obviously the ETF that tracks the gold prices, and GLD is one that I like to keep a close eye on with an idea of what gold might do. Gold has been experiencing some very interesting lower highs recently. So here's the lower highs that we're getting on GLD. Boom, 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 boom. Now, we've broken through this trend line once before. I think what we have done before is what we're going to do again. That's just my thought. Doesn't mean it has to happen, but we broke out this trend line once. I think we're probably going to be pulling back. The only difference between this break and the last break is this time some volume is coming in, and that really is because of the dollar. The dollar index is experiencing a little bit of a sell-off recently. So let me kind of open this really quick, and I'll give you guys some information on the dollar in just a second. But we're making lower lows, and I do think gold and silver are both good buying opportunities long-term, the actual physical metal. I think buying gold, specifically buying silver, because it's right around $15 an ounce right now. I mean, $15 for an ounce. I mean, you can buy a lot of silver for that price. So loading up on some silver longer term really is just a longer term investment at these levels. I do not think is a bad thing. As far as trading the actual ETF, just keep in mind that we are at some really strong resistance on both gold and silver. So Albert, the Chief Technology Officer of Real Life Trading, he does have some shares of silver. He is an active real life trader. And he has a covered call here at $15, expiring next Friday. Will that expire worthless? I'm thinking probably. I do like this little pattern. Some analysts are saying maybe we form a cup and handle. If you're trading GLD or SLV, my thought is yes, more than likely we will pull back just a little bit. And if we bounce, keyword, if we bounce from that pullback, I do think that would be relatively viable. Here's the reason I think that. Here's the dollar index, ticker symbol DXY. And the reason I'm pulling up this is because I want to show you what I was thinking about the dollar and what it could do, I don't know, a while ago. And here it is. Here's my image on TradingView. And this is the chart of the dollar and kind of my analysis of what I thought about 2 months ago. So this is the daily chart, I believe, on the dollar index. And so what I was mentioning is we'd sell off a little bit, retrace a little bit, form some type of double top, and then maybe make its way down to this 93 area. So if we load, we can see that the curvature is actually working pretty well. In fact, check out this timing. I can't zoom in perfectly, but notice how I drew this little pivot right there. Right about the timing is right when I mentioned it would roll over, was that when it was right at the high right here. So if I hop back over to the dollar index, right about there is when we were getting some pretty nice little selling signals on the daily chart. So here's the weekly chart on the dollar index, and this is the very interesting little pattern right here, kind of a little bit of a double top type of thing. So if we do retest, I think that could be the pullback on gold and silver, and then we roll over on the dollar index, causing gold and silver to go up, maybe causing equities to go up potentially, and also maybe causing oil to increase. But I do think that support will hold down there at $93 on the dollar index. And if that holds and we bounce, I think longer term, that's when gold and silver and energies make their 2016, potentially 2017 lower low in general. So we'll have to see how that plays out, ladies and gentlemen. That's kind of my bigger perspective on gold, silver, bonds. If equities are going down, bonds are probably going up. So here's your TLT, which is your 20-year Treasury bond. And this is the weekly chart on the Treasury bond. And keep this strong resistance in mind. This 2012 resistance around 130. We've broken out of it once before. We were in a very, very nice triangle for a while on the 20-year Treasury bond. There's your triangle, and we did break out of that bullish. So keep in mind, volume is increasing. We broke out of a chart pattern. We're making higher highs, but Notice the amount of candles. This is a very important thing, ladies and gentlemen, when it comes to timing for a trade, because a lot of analysts do disagree with me in the sense that entries are really important. A lot of people say stops are the most important thing. I'm not denying that stops are very important. Obviously, they're very crucial to trading, but I also think entries are very, very commonly overlooked. Getting a good understanding of timing, when to enter and why, I think that's really what makes traders less stressed out and more profitable on their trades, is being able to determine the right entry. And a lot of it does come down to understanding the candle sentiment. So if we're looking at TLT here, and you can see 1, 2, 3, 4, 5, 6 bullish weeks in a row. Well, look at the last time we had 6 bullish weeks in a row. 1, 2, 3, 4, 5, 6. 6 bullish trades in a row, and then bam, we pull back and then we end up bouncing up. So I'm not saying that this is not a good time to buy, but I do anticipate, instead of buying here, just simply be patient, allow for the pullback, and then buy the dip on the bonds. I think that's a good possibility. Nathan Moss was learning me something today on the 30-year Treasury. The 30-year Treasury bond also looks pretty similar to the 20-year, except it's a little bit higher. And again, looks like we need to possibly buy the pullback on that as well. So anyway, if equities are going down lower, bonds potentially likely to increase overall. We'll have to see how exactly that plays out. But regardless, I don't trade bonds that often, but can do some fantastic analysis on them, and of course, help you guys out with any questions that you might have. Thanks so much for watching this Wednesday Real Life Stock Review. About to hop into Energy Wednesday here in the afternoon trading room in about 11 minutes. Hope to see some of you guys there. And until your next review, which is on Friday, remember, love life, live life, and trade it. See ya.